Question 5a asked you to prepare the capital account to determine drawings for the year ended 30th of June, and you were not required to balance the account. Now I'm going to balance it during this example just because it does help you solve it. So just because it says you don't have to do it doesn't mean you can't, and you won't be penalised for doing so. So what we want to remember is capital is known as equity account, and it's going to go up when there's a net profit and down when there's a net loss. What we also want to remember though is that it does go up when we contribute capital, and the opposite of that is decreasing when we take out drawings. So we also want to remember those two things as well, because there's four things that will affect capital. So now that we've got that, we kind of can just go through the question and pick out and go and find those four items. So let's start with the first information. We were told that the business reports annually on the 30th of June. We were given the balance for capital at the end of 2014 was 450, and at the end of 2015 was 620. So what that means is at the end of start of July 2014, the balance was 450. At the end of June, the balance was 620,000. So we want to enter the opening balance. Remember, they report annually, so the opening balance would actually be from the 1st of July. That would be 450,000. And what we do know is that when we balance this, now we weren't asked to, but when we do balance it, we would balance it to $620,000 on the 20th of June, on the 30th of June on the debit side, and we'd carry that down on the 1st of July. So now we can just go through and look for those four items. So the first one we're going to look for is net profit. So the question told us that the net profit in 2015 was 120,000. We've also got the net profit for 2014 of 105,000. We don't need that number, so we're only going to use the figure for 2015. So what we want to remember now is that this is going to increase on the credit side. And so what would happen, and again, we're not asked to do this ledger, but just to demonstrate all of our debits and credits together, we'd have a debit going to the profit and loss summary account and a credit going to the capital account for 120,000. So what's important is we get our reference here right, well, profit and loss summary, and that's why it helps to do little dummy ledgers on a scrap bit of paper or in the margins. So we've done net profit, therefore we can only have a profit or a loss, so we don't need to look for a net loss. So that just leaves capital contributions and drawings. So let's start with the capital contributions. In the additional info, we were told during April, the owner had contributed $95,000 additional capital, comprising $75,000 cash and $20,000 of equipment. So given that they report annually, this hasn't been recorded yet, so we're going to enter it. So what the owner did was they gave the business $75,000, so in the bank ledger that would be a debit, and that would show up as a credit into capital, and the reference would just be bank. We've also got the owner giving the business $20,000 of equipment as a capital contribution. So again, a debit into the asset account, and then it shows up here as a credit with our reference being equipment. So we need to split up these two entries. They're for two different things. They'd come from separate journals. So this contribution would be in the cash receipts journal. This one would be in our general journal. So they go in separately on separate lines here. So that just leaves drawings, and the issue here is we're only told that all drawings were cash. We're not told what the amount was. So to do that, that's why it helps that we've put in all the information, including the closing balance, because what we're going to do is recreate this ledger and solve for X. So what we'll do is we'll say drawings must be X. We don't know what it is. We do know there is a figure. So what we do know is if we total up all the credits there, we get 665,000. We put that number on the debit side. So what we know is that if we take 665,000 less the balance going forward into the next period of 620, that must equal our drawings figure, which is actually $45,000. So now we have that figure, we can now go and close drawings to capital. So in this case, we do a credit to drawings, and then we'd send it as a debit here to capital, and the reference would be drawings for $45,000. Looking at our marks for this question, it was the marks and the way they were awarded was quite interesting. We've got one for the opening balance, one for the net profit figure, one for the capital contribution of cash, and one for the contribution of equipment, for a total of 4. And that leaves a lot of numbers without marks. So the drawings figure actually had no mark awarded to it, but there was -1 if it wasn't included. And what that means is it's actually consequential to all the other numbers. If you've got all the other numbers correct, it does imply that your drawings figure is correct. The fail-safe is to always just do the ledger completely from start to finish, and then you don't need to worry about how the marks are actually awarded. Looking at the mark breakdown, 25% of students got 0, and at the top end 32% got 4 out of 4, so this was quite well handled. and the average was 2.2. The examiner's comments were there was a common error to combine the bank and equipment entries for the capital contributions. Now remember, they would come from separate journals, so they'd be separate entries. And another common error was using the reference net profit instead of profit and loss summary when transferring the profit to the capital account. So that's why it helps to do little ledgers in your margins and on scrap bits of paper, because there's no such ledger called net profit. It's actually called profit and loss summary.